Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down companies on a fundamental basis and look at those popular businesses that are in the news, or maybe the ones that we find interesting and perhaps we're looking at investing ourselves. I'll tell you, it's not the latter today. We're going to pick a popular one that has been all over the news this week, and that company, let's talk about Twitter. That company is quite prominent, obviously, because of a little known guy named Elon Musk right now.
Little known guy.
Yeah,
That's definitely sarcastic.
of course.
Yeah, he spent a couple $1 billion, or I guess it was, and really, and sometimes I think he's got to be in the news every day. He's got to do something to get his name out there. But it was quite the surprise that he did that. He just sold, I forget how many billions of dollars of his Tesla. Was it 20 billion, 30 billion? That's quite a bit. I don't remember.
Like $12 billion in tax or something crazy.
Yeah. So it's probably a lot more than the numbers we're talking about. So he had to turn around and spend a few $1 billion, get on Twitter. And I like Elon Musk on some things I don't like on him. We've said before, it's a great car, Tesla, but I think the company is way overpriced. But now we're going to look at what he maybe saw in Tesla and his,
On Twitter?
Oh, I'm sorry. You're right.
Oh,
Twitter.
yeah. Okay. Yeah.
Twitter.
Well, he started Tesla, so I'm like, he's
Right.
there.
What he saw, why he invested all his money in Twitter. And I think investors want to realize maybe you shouldn't follow him because his investment objectives could be far different than yours along with his investment reasons. So we'll look at the numbers, see if we can find some good news here for you. But I don't know.
And I'm going to go out on a limb here and say, I don't think he's doing this to make money. I think he's doing it because he has a lot of money and he's like, I don't like the way that Twitter does things, so I want to make a change. I think that's what he's looking at because he's already made so much money. Obviously, he's the richest man in the world. I think he's saying, I don't like that Twitter compresses people, limits the free speech. I want changes there. I don't care if I make a profit off it. If I make a profit, I'm sure he's thrilled with that. But I think he's wanting to go in and do it more so to change the culture of that company and change the way that they work, kind of stir things up, stir the pot.
And you're so right on that too. And I think it's a big thing. You're right. It's free speech, not making money on this here. And the thing that you don't know, if you try to follow him, he could sell it tomorrow. Stock drops, and they are left holding the bag. So be very careful about trying to follow big investors. Just follow what they invest in, follow them, because you could be left again holding the bag where he got out or she got out, could be a she as well, and you got out too late. So always look at the fundamentals, what we talk about.
Yeah, and the thing I look at with Musk too is he bought like 9.4% of Twitter, and what actually happened is now he's going to be on the board of directors at Twitter, and it looks like he's kind of started to sway things a little bit. I know he tweeted about an edit button. Now they're looking at doing an edit button on Twitter, so his presence is already being felt somewhat. But now what they're saying is, by him being on the board of directors, he's capped on how much stock he can buy. So don't think he's going to go out and buy 100% of Twitter stock. Now, in theory, he could leave the Twitter board and perhaps do a hostile takeover on the company because he has that amount of money. Or another thing that could happen, kind of that you alluded to, is what if all of a sudden he says, no, things aren't changing the way I want. I'm going to go start my own social media company, or I'm just going to leave Twitter and go do another thing. And then, as you said, he starts selling the shares. That stock's going to fall like a rock. So don't, as you said, chase him into it on hopes that he's going to buy more stock and drive the price higher. I think he's just trying to stir the pot here and make his presence known and get some changes over at Twitter.
Well, let's start a rumor, and he says, let's buy Facebook.
Yeah, maybe.
You never know.
Meta. No.
Meta.
What's Facebook?
That's
Yeah.
right. That's right.
But it's so important too because this has become quite popular when Warren Buffett buys companies, and we saw that with HP this past week, where the stock went up 10% because Buffett has a stake. When you have these big prominent investors in there that step in and buy it, that generally leads to a 1 day, 2 day, maybe 1 month bump in the stock based off of the excitement around that person being involved. But it all comes back to the numbers. If I don't care Warren Buffett invests in something, if it's too expensive, I'm not going to go out and buy it because you could have already had a 20% increase on the Buffett news. And now it's like, well, the value's not there any longer. And you want to make sure with Twitter, that's not the case, that, it is still a good buy in case Elon Musk does leave or in case Elon Musk doesn't get through what he wants to get done. So don't just buy it because of Elon. you want to look at the numbers as always.
Exactly.
So with that, let's take a look here at the numbers for Twitter, based off of our fundamental analysis and what we generally look at to see if companies are reasonably priced and good buys.
And there it is in the internet content information industry. 5.6% is the float, or for the short. We do see institutional ownerships higher than I thought, 78.5%. Now, no PE ratio because they've not made money over the past year. The industry's at 19.4. Price of sales are expensive, 7.3 versus 5.9. Price of tangible book value is expensive, 6.2 versus 5.3. And wow, look at that price of cash flow, 58.4 times versus 19.6. Now, I'm surprised on the PEG ratio here, 1.0, same for the company in the industry. I'm surprised they have a PEG ratio. Now, we do see over the last year and even the 5 years, they've never had any earnings. The industry did have a 96% growth in their earnings. The sales over the last year for Twitter up 28.7%. Sounds pretty good, but look at that industry number, 51.7, about twice as good as what Twitter did. And then we do have a 5-year estimated growth from the analysts here of 80% versus 17.6. I'm not sure how they're coming up with that 80% growth rate. Sounds pretty pie in the sky to me. They do not pay a dividend. We do see on the balance sheet they've got a nice liquidity here, 5.9 versus 2.9 in the current ratio. Again, telling you the capability of the company to use their current assets to pay off their current liabilities. Debt to equity not too bad, 0.8 versus 0.2. Intangible assets 9.8% versus 10.5. We got a net profit margin here of a negative 4.4 versus a positive 28.5. And I got to say that's not quite as bad as I thought it was. It means they lose about 4.4 cents for every dollar they bring in. I would like to see a profit there. We'll see if Elon Musk can turn that around. But the industry has a nice profit. They make 28.5 cents for every dollar they bring in. Then obviously no return on equity. They have no earnings, so a negative 3% return on equity versus a positive 30 for the industry. Chase?
Yeah, so current price here for Twitter was $46.23. You see this 52-week high achieved last year, $73.34. So even with the Elon Musk news and the hype that's been built into it, still nowhere near that high. Now, because of Musk, it has come off the low of $31.30. You see year to date, it's up 7%. You see that's all come from Elon Musk, though, in the news. That's over the last 5 days, it's up 17.7%. You see the 1 year return, though, down 33%. We do know the company, about $37 billion market cap, so it is a good sized business. Now, if we go forward to December 2023, I do see estimated earnings per share of $1.15. Would give us a target sell price of $19.09. So still well below that current price of $46.23. So I don't care that Elon's involved. It's way too expensive, and I'd still have to avoid this stock. And the other thing too that I wanted to kind of talk about is with Elon Musk getting involved. And my whole thought is he wants the free speech. How do you monetize free speech? What's going to be the earnings driver that Elon Musk is going to bring to it? And that's why I think he's doing it for personal reasons, not to make a profit, because you can't monetize the free speech as well.
You can, but he could make maybe the product better because the concept is pretty good. And I think a lot of people turned away from Twitter because they didn't like, some of the things they did. If you make it open and everybody likes it, maybe you can increase that. You get more eyeballs looking at that. You can increase your advertising rates. So that's what he has to do, is get more people to use it. We don't use Twitter here at the office. It just we use obviously YouTube, we use Facebook, we use LinkedIn. Much better venues for us. But I mean, we don't tweet, we don't follow tweets, and if they made it more usable, where we could have people read more of our stuff, we would do it. But it just we'll see what he does on that. But I do have to side with you that I think he did it not so much to make money or turn the company around, but to really get free speech. He's a big free speech guy. I mean, so am I. But it's just like I think that's what his agenda is.
And I don't know how much time that guy has in a day. I mean, he's got Tesla. I know he's talking about his humanoid robots that are going to come out from Tesla next year. He's got his boring company for the underground tunnels. He's got SpaceX. Not to mention he's poked the bear at the SEC, filing a lawsuit against them. I don't know how much time he's going to have to turn on Twitter. And the guy amazes me. I know he works his butt off and would sleep on the factory floor at Tesla. Still, I mean, gosh, how much time does he have to work on on Twitter?
Jeez, isn't he married and doesn't he have a kid as well?
Yeah,
Uh,
I don't know if he's married. I don't know if he's with the same girl, but he does have a kid, and I do know that.
and I think the kid's name was something funny like Moonbeam or something, wasn't it?
It was a
Some
bunch of symbols, actually.
symbols. Okay, yeah, I knew it was something out there, and but I just wonder how much time he gets to spend with that kid. I don't imagine very much. Well, maybe he does. Maybe he doesn't sleep. I don't know.
Yeah, yeah. I don't know. I'd avoid it. And the other thing too that I'm very cautious on companies like Twitter's. Again, we've seen the rising interest rates from the Fed. Now we know that they're talking about the balance sheet runoff at about $95 billion a month. That's not going to be good for the 10-year note and could increase the long term end of that yield curve. That is bad news for these high PE stocks, these high price to sales stocks, these high valuation stocks like Twitter. I just don't see them doing well here in the next few years as interest rates, I believe, continue to rise as inflation isn't going anywhere, unfortunately.
And I agree with you. I think on best case scenario, in the next few years, we'll see these companies stuck in a trading range, up and down, up and down. And you look at them 3 years from now, like pretty much the same as they were, because very hard to compete against rising interest rates. And I think that's how long we could have rising interest rates. We'll see. We're always monitoring here at Wilson Asset Management.
Yep, yep. So we hope you find that interesting. We hope you didn't go buy Twitter because Elon Musk did, or maybe you did, made a profit. Good for you. But again, we're long-term investors here. So thank you again for viewing the video here. If you found it interesting, be sure to hit that subscribe button below so you don't miss our future videos going forward. Just as a reminder, this video is for informational purposes only and should not be used as investment advice. If you are interested in learning more about our firm, be sure to visit our website, smartinvesting2000.com. Thank you again, and we'll see you guys soon.
Have a good one.